If you would, give me a 2025 investing primer. I want to know, for the person who just wants like a set and forget investing strategy, where should they be putting their money right now?
Well, each person's different, right? Some people have different risk profiles. Other people have different knowledge sets. But I think that a lot of the timeless investing principles are really important. So you should basically create a system that you can automate, and it pays to pay yourself first. So what most people do is they get paid, they take the money, they spend it on all their expenses, and they hope there's a little bit of money left over. But a great way to ensure that you're able to invest is to actually take out of your paycheck your investment money first, and then spend what is left over. So that's kind of the first thing, is you got to get money to be able to invest. Then what do you do with that investment money? And really, I think for the average person, what you want to be able to do is you want to dollar cost average. Every time you get a paycheck, you want to take some portion of it. You want to put it into the S&P 500, NASDAQ, and then I like Bitcoin as well. And the reason why those three assets is because they likely have very long-term resilience. They have a return profile that is pretty good. And also, they're very simple to understand. You kind of know what you're buying. I think where people tend to get in trouble is if you are an amateur, but you are trying to make professional moves. And so I say, just like the person who goes and plays pickup basketball on the Saturday wouldn't try to go play in the NBA, I don't think that the person who says, hey, I'm going to spend 30 minutes a month on the investing world should try to go and pick individual stocks or use leverage or short things or anything like that. And so understand kind of what your knowledge set is, understand what your kind of competitive advantage would be. And for the average person, it's actually discipline. Just simply continue to dollar cost average into very simple kind of plan, and then let time and the market do its thing. And usually turns out pretty well for those people. Yeah, what's really interesting is if you take the US economy in general, it has gone through a shift over the last 50 years or so. It used to be that the US economy was dominated by industrial businesses, manufacturing businesses. You can think of these companies as businesses that created physical things for the physical world. And so whether it was car manufacturers or construction or home builders, etc. But we've transitioned very much to a world where now you have what is considered these kind of capital light businesses. They're pretty much software oriented. They're able to create a product. They don't need a manufacturing facility. They don't need nearly as many employees per revenue as they used to need. And those businesses are really capturing a ton of the revenue. And so a very simple example would be, look at the media industry. It used to be all about newspapers and magazines. You had to make that stuff, and you had to get that logistically out to people, and you paid subscribers and all this stuff. Now you can simply just use the internet and you can create it. You don't need that plant to print the newspaper or print the magazine. You don't need the logistics. You simply are able to just put it out there in software. And so naturally, as that transition has occurred, the businesses that are better, right, they're more capital efficient, they're able to drive more revenue per employee or more profit per employee, they continue to grow, while the businesses that are left in the traditional economy have more of a headwind. And so that shift from industrial manufacturing, kind of physical world businesses, to these kind of software-oriented businesses really is the story of the last 50 years. And you can see that in the concentration you're talking about, right? The top 7 companies in kind of the S&P 500, the Magnificent Seven, they're all software-based businesses that really are pretty special and by a number of different measurements. But also look at the richest people in the world, right? Really, other than Bernard Arnault, who sells kind of a luxury physical item, everyone else is based in the technology world. And so that shift, I think, is really driving changes in our everyday lives. And so naturally, that shift in our everyday lives is showing up in investment returns. And you're seeing those tech stocks are doing much, much better than maybe the rest of the S&P 500. And so that, I think, is going to be the story for the next 10 or 15 years, is a continuation of this software story. Mark Andreessen famously wrote this piece about a decade ago or so, and he said, software is eating the world. And we now are seeing very real examples of this, right? Obviously Amazon used software to eat the bookstores. You can see Facebook was able to use software to eat into the yellow pages. And you kind of go through all these examples. But software is also eating gold with Bitcoin. The kind of this software-based money is really kind of much better and more popular right now than gold. You can also then take that even a step further, obviously, with the media companies. But I think AI is really interesting. Like, AI is starting to actually eat into the number of employees a company actually hires or employs. And so software is coming for all of these different use cases. and it's going to make the world more efficient. It's going to empower some really exciting, cool things around robotics and self-driving cars and AI agents and kind of, the quote unquote, the future. But also as investors, you have to understand, am I betting on things that I hope don't change? That would kind of be more of like a Warren Buffett style of investing. Or am I actually betting on things that I hope do change? And that would be more kind of a venture capitalist or tech stock investor. Once you understand who you are and what you're trying to do, then that really allows you to figure out where you're going to go put the money. What's really fascinating about this is I always like to remind people there's multiple ways up a mountain. Right. So there are plenty of people, take a Warren Buffett, who have been super successful betting on the world not changing. He's owned Coca-Cola and American Express and a number of these companies that are really good brands, have good business models, are kind of integrated into American life. And those businesses have continued to compound for a long time. Now, with that said, obviously companies like NVIDIA or Tesla or, Microsoft and Amazon and Facebook and Google, they have had, a pretty spectacular return over that same time period. They've outperformed in many cases. Now, when you look at a portfolio, I think a lot of young people say to themselves, hey, I use the technology products. I'm digitally native. This is what I understand. Kind of my competitive advantage is I can actually tell you, are my friends all using Instagram or are they not, right? What is going on? Am I actually shopping on Amazon? Am I using some of these technologies? And so I think that the younger you are, the more you're going to gravitate towards those technology companies. And I think the older you are, the more likely it is that you came up in a time where you really understood some of those more physical world economies. And so it's just two different kind of demographics, really just investing in, frankly, what they know. And so for young people, most who are probably watching this, they're going to be much more attracted to the technology companies, and those have done very well over the last decade. Describe the differences. Warren Buffett really is trying to do something that most people would consider value investing. And really all value investing is, although it is associated with a lot of the industrial manufacturing businesses, he's basically trying to buy things for less than they're worth. So he looks at a company and he's got a bunch of different calculations he'll do. And he'll say, I think that this company is worth, $1 billion. But right now in the stock market, the market cap is only $700 million. And so if I go ahead and I buy this business at a $700 million valuation, then I am pretty much guaranteed to make money because it's actually worth $1 billion. And so as long as I can wait and don't have to sell this stock, at some point the company will trade back to at least what it's worth, if not more money. And so anytime you're buying things for less than they're worth, if you actually do the evaluation correctly, you should make money, right? And so I think that the value investing style will always kind of be in favor as long as you implement it correctly. Now, to your point, and a point that frankly I agree with and think is probably the focus for most young people, is if you're not a superstar investor in terms of your ability to underwrite companies and do cash flow evaluations and understand, cash on cash returns and things like that, your better bet is to try to say to yourself, okay, well, where do I think the technology world is going and how do I go and get exposure to that? And so, my view of the future is one that people would probably put on the spectrum of very excited about what technology will do to our lives. I fully believe that we are going to have self-driving cars, and there may be even a world where humans are banned from actually driving vehicles. I think that we will all have humanoid robots that we interact with on a day-to-day basis. You can see this obviously in places like, warehouses and things like that, but it's not a far, kind of thought process to think that we're going to have these humanoids in our homes. Right now, I always say that there are, cleaning devices that people put into their homes and it'll go around and it'll kind of clean the floor. Well, what happens when all of a sudden you can have a humanoid that'll do the dishes or do kind of household chores and stuff like that? People probably be pretty interested in that. If you go and you look at things like DNA sequencing and CRISPR technology and the ability to either biohack yourself to more longevity or more kind of healthy years, or also maybe to avoid certain diseases with babies and things like that, that seems like a huge, area of opportunity. Then you go to places like Bitcoin, and obviously there is hundreds of millions of people around the world who have chosen to take some portion of their wealth and store that economic value in a decentralized asset that is software-based, that can't be taken from them and can't be debased by somebody else. And then you go and you look at things like drones, and it's obviously changing kind of the entire battlefield and how these things are being used, and it's removing humans, and it's now becoming much more of a technology battle in these wars. And then you can kind of go even a step further and say to yourself, okay, well, if all those technologies are happening here on Earth, What happens when you introduce rockets and the ability to inexpensively go up off of the Earth's surface and get into space, whether that is to go to Mars or to explore more about the moon? Or I'm an investor in a company called Varda that is literally putting manufacturing units in space. So they bring pharmaceutical drugs up, they manufacture them in zero gravity, and then they bring them back to Earth. And so you think about this stuff and you say, the future is very, very bright because technology has now got the capital flowing to it to be able to build these things. And really, we are only limited by our creativity. What ideas can we think of that we can now kind of use software to actually go and implement? And so if that is the trend, then really what it is challenging investors to say is, hey, do you want to be more of a professional and go pick individual stocks? You can do that. There's more access to information than ever. You have direct access to the market through things like Robinhood, Public, Webull, etc. Or you can go and you can simply index. You can buy the NASDAQ 100 or any of these kind of tech-oriented indexes and say, hey, look, I actually just want exposure to technology in general. Regardless of the way you choose to actually get kind of exposed, I do think that technology has performed very well and will continue to perform very well as long as you don't have to time markets and say, I'm buying today, I'm going to try to sell tomorrow. If you can say, hey, I'm going to buy technology today and I'm going to hold it for a decade, very hard to see how technology does not continue on the trend that it's on. And so if you think about Bitcoin, right, the way I treat Bitcoin is it is an asset that I buy and I'm going to give it to my grandkids. So the reason why that's really important is that's not a new phenomenon with just Bitcoin. If you think of, let's take the country of India. In their culture, gold is passed down from generation to generation to generation. It could be jewelry or kind of the family gold, right? If you think in the United States, land a lot of times is passed down from generation to generation to generation. And the ability to pass these assets on from generation to generation really drives quite a bit of wealth, right? Whether it's real estate, land, gold, or any other asset. Bitcoin has a lot of the same properties of these assets. So if you think about land, it's a finite asset. They're not making more of it. Same thing with Bitcoin, right? It's a finite asset. There's only 21 million that will ever be available. If you think of gold, it has sound money principles. It's outside of the system and no one can devalue it. Same thing with Bitcoin, right? It's outside of the system and no one can devalue it. And so I like to think of there's a very small amount of assets that you can buy today, you can hold your entire life, you can pass it on to your kids or grandkids, and that is going to set up your family and kind of those that come after you to be in a really good position. So that's Bitcoin for me. It stores economic value really well over a long period of time, so I want to make sure I have that for some portion of my portfolio. When it comes to technology, I am not like a Warren Buffett. I don't want to try to bet on the world not changing. That's not how my mind thinks. It's not what I'm intellectually stimulated by. I am much more interested in how things are going to change and where that change is going to occur and who is driving that change. And so these new technologies, in my mind, are absolutely fascinating. And what I notice in the market is that now not only are entrepreneurs having capital available to them, there's tons of people who want to give people money to go and kind of change the world, but also the technology that is available to these entrepreneurs to do this makes them 10, 20, 50, 100 times more effective. And so if you think back to businesses, it used to take forever for them to get to $1 million of revenue or $10 million of revenue. We are now seeing businesses launch and get to $1 million of revenue in the first couple of months, right? In some cases, we have seen businesses that literally are getting to $100 million of revenue in 2 or 3 years. And so any time that you can use technology to be a more effective company, to grow faster, to be more efficient, obviously value is going to accrue there. And the way that I think about kind of this brand new future is 2 things remain true. Who is the person who's actually building the company? Whether they're in the public market, the private market, whatever, you're betting on a person, right? The same way that somebody would come and bet on somebody building a manufacturing business or a food business or anything, you're betting on a person. You need to make sure you get that right. And then the second thing is you need to bet on these long trends. And the beauty right now is that technology has the tailwind because ultimately there's an economic incentive. And I think that that's really something that gets lost on this, right? If you think about somebody who wants to go start like a local restaurant and they go and they talk to investors and you say, well, how much money could I make here? There's usually a cap, right? Hey, we have 50 seats. We can turn over the seats 3 times a night. We're open 6 days a week. And you do the math and you're like, okay, the most amount of money that this business can make is X dollars. And it doesn't matter how long they're in business, it's just capped. That's what this business can do. But these technology companies, they kind of have exponential growth. So if they start today, they say, hey, look, we're making X or Y product or service, and we're going to sell that. And when we get started, we think we can sell it to a certain number of people. But over the next 10 years, we think that that number can literally go up 10 or 100x. And so there's no cap to the upside of these companies. And a great place to watch this is a company like Palantir. I mean, Palantir hit a $100 billion market cap. They literally started off basically as a service. They went to companies or organizations. They said, hey, we have this, really unique technology capability. Why don't you pay us some money and we'll kind of custom solution for you? And then over time, they began to build that into a technology product. Now that technology product is used by people all around the world, and they built a $100 billion company. It's insane. And so that's where ultimately I see from an investor standpoint is I want to be in businesses that have unlimited upside potential. And if the entrepreneur is good and continues to do what they're supposed to do, then I can put $1 in today and get back way more in the future. And I'm not capped by physical space or the number of times I can turn over a table or something like that. And so I do think this technology trend is just really, really big, but it's showing up everywhere, right? And I think that for the people who are watching this, regardless of what industry you're in, technology is probably infiltrating it. And if you think it's not, then you're not looking hard enough. Because right now, if you take AI maybe as the easiest example, AI is coming after blue collar jobs, and it's going to come after white collar jobs. The AI and machine learning and self-driving cars, is it going to take away Uber and taxi drivers? At some point, yes. When? I don't know. But it's also going to take away truck drivers. And it's going to take away a lot of people who are employed as drivers. But then if you go and you take a look at, I know a lot of companies. I was having breakfast with a founder today, and he said that he thinks that he can take his company, which currently has 85 employees, and he thinks he can actually use AI to shrink the number of employees from 85 to 50. But during that time frame, he's going to 5x his revenue, which means that he can take his AI and he can actually replace some of his software engineers. He can replace some of the marketers. He can replace some of the designers, and the software is going to start to do this stuff. And so if that is the path that we're on, is things like AI are going to infiltrate every industry, it doesn't matter if you're in accounting, if you're an engineer, if you're a designer, if you're in ops, if you're in sales, whatever, the way that you insulate yourself from this is you become the most knowledgeable person at your company on these new tools, because they will be the last person that they can fire is you. And so one quote unquote investment you can make, you can make financial investments, but I also think you can make a kind of career or personal investment by becoming an expert in using these things, because it will help you continue to be employed. It will help you to continue to drive income, whether you're an entrepreneur or an employee, and that will give you the funds to then go invest in the market. And so this idea that, hey, we're just investing is partially true. I think it's really important that people understand these tools are coming for people's jobs, and the people who will survive are the people who know how to control them, who know how to use them to be better at their jobs. And so don't ignore it, actually embrace it, go become the expert, and you'll become more valuable to your company.